After Berkshire Hathaway begins being outperformed by several U.S. representatives, Warren Buffett throws in the towel and begins aping into Bitcoin. But seriously, as more and more bad takes come out on CNBC or the Wall Street Journal, we look at why so many smart people dismiss Bitcoin by trying to compare it to other things, such as stocks. And finally, we hear right from the horse's mouth, Michael Saylor himself, on why you should consider owning real Bitcoin versus MicroStrategy stock. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. Since the passing of Charlie Munger, Warren Buffett has changed his tune about Bitcoin. His longtime partner Charlie Munger once called Bitcoin rat poison squared. But now, Warren Buffett doesn't feel that way. He's learned a lot about technology through his investments in Apple and is now hip to new digital and emerging technologies like Bitcoin. You see, recently, Warren Buffett has been really frustrated that there are 4 sitting U.S. Congress people that are outperforming his portfolio and potentially dethroning him as the greatest investor of all time. With Berkshire Hathaway sitting on $167 billion worth of cash and employing the T-bill and chill strategy, they've decided to throw in all of their chips and full ape into Bitcoin. Now, if you actually believe me, you've been fooled. Happy April Fools, everybody. Bitcoin is an obvious solution to the financial problems that we face. Sort of like a 300-pound lineman running right down the middle of the field that we somehow seem to miss. In the midst of all the chaos, we're unable to detect it. I don't think that people miss Bitcoin because they're stupid or they're somehow irrational. It's because they're trying to value a transformational thing like Bitcoin or the internet or mobile technology by basing it off of things that they used to know about, like our old financial system, or stocks, or bonds. And instead of humbling themselves, they dismiss it altogether. Let's look at this clip from just this morning on CNBC.
Pick your asset for the greater fool theory. Is it NVIDIA? People, trains leaving the station, I gotta get on it.
I don't disagree.
Pick your meme stock, pick your commodity, cocoa, pick whatever you want. I mean, there's no doubt that when there's liquidity everywhere, that it's going to chase assets and things like that. But that, I don't think that because that's one of the reasons it goes higher doesn't undercut the fundamental case for that asset. That you have to, on a case-by-case basis,
that is the fundamental question. And we don't, and only, 5, 10, 20 years from now we'll know the answer.
I think there are people that do understand it, that don't have that question about the fundamental underlying.
There are people who have certainty. Whether they should or not is a question.
Another key piece is Bitcoin is a decentralized organization that has no marketing team, right? And so price is the marketing of Bitcoin. When the price goes up, speculators come in. Right. But what ends up happening is when we get those drawdowns, some of them stick around and become kind of Bitcoin believers. Some of them do leave.
I mean, Netflix is a great asset. It's either worth $800 or $170. You get the train leaving the station and it's up to $800. You get the train comes back to the station, it's $180. I mean, it's an asset that people watch, subscribers come in, they have new hit shows, they do all that. There's no questioning the underlying asset value, but on any given day, greater fool theories or momentum or euphoria.
You own a company, you own a percentage of that company, you own a percentage of the revenue, you own a percentage of the earnings that come through. I mean, that's the argument. If it's a company that pays dividends, you get a percentage of that.
You got to do Graham and Dodd, you got to go way down the line.
Graham and Dodd is productive asset.
You got to go way down the line to where you hope. I mean, with a stock that doesn't pay a dividend, you can't say that.
No, but with a stock that has earnings, with a company that has earnings, you get a portion of the. That's the difference between a productive
from the dividend.
If
you get the dividend, you don't. It doesn't flow through until
you still say this is a productive asset.
But you're hoping the dividends go up over time. You're hoping dividends go up over time. It's not even dividends.
If you don't pay a dividend, you still have a percentage of the earnings of that company, and you figure that will make your stock more valuable over time because the earnings that the company's kicking off.
I mean, a couple of things are actually crazy here. The fact that they continue to say that Bitcoin is purely speculative and has no value is weird because it's a $1.4 trillion asset. There are nearly 700,000 daily active wallets, 5 million weekly active wallets, and over 17 million monthly active wallets. Oh, and it continues to process more transactional volume than Visa and MasterCard combined. Oh, and by the way, someone can send a $1.3 billion transaction for $1.29 in fees. It's a digitally scarce bearer asset that you can actually own and verify for yourself. Becky claims that you can own a share of a company. Does Becky know that however much Bitcoin you buy is however much Bitcoin you own of the 21 million in the network? Oh, and by the way, the shares of Bitcoin can't be diluted like the US dollar or stocks. And do most of these publicly traded tech stocks out there actually produce cash? Do they actually produce profits, earnings, or dividends? Or do they just show that they do by making up adjusted EBITDA numbers? That's a completely different conversation for another time. Because Netflix isn't actually issuing a dividend, you're buying Netflix because you believe that the price of the stock is going to go up, not because of the cash that it's going to give you. You're buying Netflix because you believe that Netflix is dematerializing the physical content world. You're buying Netflix because you believe that digital content and digital information is easier to create, send, store, track, and monetize than physical DVDs in this case. Buying stocks, and specifically stocks in US companies, isn't something that people all over the world can do. But it is possible for nearly 8 billion people to buy Bitcoin today and become their own bank. When you buy a stock, you're buying counterparty risk. And this is a question I get all the time in the daily@swanbitcoin.com email. Should I buy MicroStrategy versus real Bitcoin? Well, listen to what Michael Saylor has to say about this himself.
Hi, I love what you're doing in your stock. In fact, I've made 5 times more on your stock and derivatives around it than buying Bitcoin. So one of my questions would be, why should we buy Bitcoin? Why don't we just buy your stock? And what do you think the halving event is really going to do to the price?
Bitcoin's a commodity. It's an asset without an issuer. Whenever you invest in a company, you're taking counterparty risk. In order to invest in my stock, you should reasonably read 1,000 pages of disclosures. And I'll make the obvious point. People in Nigeria can't self-custody MicroStrategy stock. So what we're trying to solve the problem of creating integrity, sovereignty, truth and hope for the world. That's going to be done via protocol, right? MicroStrategy is simply a high performance business, right? There's a lot of other businesses, and every business does their thing in the world as best they can. So we offer a very particular thing to us. We offer convertible debt to convertible arbitrageurs, and they have billions of dollars of capital, and they can only convertible arbitrage. So if we didn't give it to them, their capital wouldn't come in the ecosystem. And so that 1.4 billion that I got came from them, that went into Bitcoin. I need to do something for them. It's a complicated something. There's a lot of volatility to it, right? There's a limit to how much we can do.
Can we just buy your stock then?
The truth is, I would recommend to anybody that's interested in Bitcoin, they should study Bitcoin before they buy anything. And then after they study Bitcoin for 100 hours, I would say you ought to buy the Bitcoin. The real debate ought to be, do you buy the Bitcoin in self-custody, buy the Bitcoin institutional custody, buy the Bitcoin through an ETF? Because
what about the halving?
Bitcoin is the innovation, right? Bitcoin is the innovation. If you are a professional investor and you have billions of dollars of capital, by the way, the investors in my company aren't allowed to buy Bitcoin, nor are they allowed to buy the ETF. Their charter is, here's $10 billion, you have to invest in publicly traded operating companies. So my company is meeting a need for certain types of investors that are sophisticated. I'm not here to promote my company, right? I expect Bitcoin will be here 1,000 years from now. My company won't be, I won't be, right? There's not much to be said there.
The person interviewing him, Peter Diamandis, is his MIT classmate and longtime friend, and he even has an explanation or theory as to how things grow exponentially. He breaks them down into 6 Ds. The first one he says is digitization. Once something goes from physical to digital, it has the ability to grow exponentially. The second one is deception. When a network is small, its growth rates may go from a small number to another small number, but the rate of growth and the rate of change is exponential, sort of like the rate of growth and adoption in Bitcoin, whether that be the number of users, addresses, hash rate, or even market cap of the company. Bitcoin is a $1.3 trillion asset that was worth 1 penny in US dollar terms less than 15 years ago. The other aspect, demonetization. As Jeff Booth states in his book, The Price of Money, goods become cheaper as technology increases over time. And people are trying to describe Bitcoin, which is a deflationary technology, in an inflationary monetary system. The TV that you bought 10 years ago is now significantly cheaper through the advent of technology. Take this same approach to music, to books, to content that you read online. Now extrapolate this same idea to music, which used to have physical DVDs, or books, which are now Kindle versions, newspapers, which are now digital subscriptions. The fifth D is dematerialization. This goes to the simple fact that software is able to be produced cheaper and replicated across more devices. Think about your TI-83 calculator. Now we have that same advanced technology through software for free on our phones. And the last one is democratization, which means that more people will now have access to this technology. People don't realize that we've placed an extraordinary monetary premium on things like stocks or real estate or even the dollar. People are opting out of things that are debasing like the dollar and into things like stocks. They always have. And although I was joking about Warren Buffett aping into Bitcoin, he makes a good point about why you should have aped into stocks a long time ago. Look at this story that he talks about where $114 would have turned into $400,000 by investing into the stock market and holding it for a long time.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today. Oh man, $400,000 today, one person's lifetime. Now the market's gone down many times during that time. People have panicked during that time. Headlines have been terrible. But if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold to you.
Now, let's compare this to Bitcoin. The Bitcoiners who started stacking at all-time highs in late 2021 are even outperforming people who started stacking in 2022 because the more time you're in Bitcoin brings you greater returns versus timing the market. Bitcoin is an incredible savings technology for people who want to take a longer-term time horizon, or what we call low time preference in Bitcoin. We all wish we could go back in time and start buying Bitcoin in 2010, 2011, or selling our overpriced 2-bedroom condo in New York in 2015 for 50,000 Bitcoin.
We received your offer yesterday.
I'm looking at about 50,000 Bitcoins.
Bitcoin?
In Bitcoin. That puts it in at around 13 and change.
But you want to pay in Bitcoin?
Yeah.
You sent us an offer in Bitcoin? I'll be totally honest with you, Ryan. That's not even the biggest problem.
Okay.
This offer's $1 million below ask.
Right.
Which, by the way, would be worth $3.5 billion. So if you don't believe that Bitcoin is dematerializing real estate, you're either just being willfully ignorant or maybe you're not seeing the signs. Start to think about how Bitcoin is potentially dematerializing things that you once valued from the old financial system. I'm happy to help you. If you're someone who needs help understanding why you shouldn't value Bitcoin the same way as you do Netflix or MicroStrategy or other stocks, please do send me an email at daily@swanbitcoin.com and I'm happy to help you. I want you to start stacking Bitcoin. I want you to start having digital property that is scarce and cannot be taken away by others, so that when the time is right, like Zach Edey, you could be cutting down the nets on your own term and not using the fiat ladder that's offered to you. And with that, we're signing off. This is Dante Cook with Swan.com. Happy stacking.